everybody. Welcome back to Markets and Madness, the place where we discuss the madness that occurs when economics, politics, and personalities all move in different directions. Tim and I today, we've been off for a couple of weeks, a lot going on in both of our lives recently. But it's great to be back. It's great to get a chance to get on the podcast and talk about what's going on in the world, because there certainly is. How are you, Tim?
Good. It's been an amazing few weeks, hasn't it?
That's
Since the
right.
last time I talked to you um, on online, uh, we've seen massive moves. And
All
the
of, I
macro,
mean,
the macro picture is really driving everything. I think. Uh, First of all, I think I keep hearing people talking about the Fed and the Fed this and the Fed that, and I don't want to demean the importance of the Fed. The Fed is important, but nowhere near the way it used to be. When we took for granted that fiscal policy was going to just continue, when we were going to keep spending and borrowing and spending and borrowing, think about it. Um, you're talking about a reduction in the debt in three directions. Number one, in relative terms, as the economy grows, we were talking about GDP at around 2% not too long ago. And it's kind of taken for granted that we're looking at four, maybe even higher. Double GDP. Think about it this way. Suppose you were making $100,000 and you were in debt up to your eyeballs and having trouble with the interest payment. Well, the interest payment becomes an odd lot if your salary goes up to 200,000. You have no trouble meeting that. And the Fed is controlling the interest rate on the debt in a sense. Uh,
right.
so yeah, that's it's not as important as the economy growing to the lengths it's been growing. Throw in the tariff revenue, and you've got a much better picture. So the debt in relation to GDP is shrinking. GDP is growing, so therefore the debt is shrinking, and therefore the interest on the debt is shrinking. Now, the price on that interest on the debt, that's the Fed. And if you can get that lower, well, that helps. It means your interest payments are reduced, but you're paying on a smaller principal. And that's the key here. So I think fiscal policy is going to drive and dwarf monetary policy going forward. At least that's the way it seems to me now.
Well, because Congress certainly isn't cutting any spending. That's not happening, you know. And I read these comments from Rand Paul. He said, "Listen, both parties are still spending." He says the Democrats want to increase the debt by 3 trillion. He says the Republicans are the conservatives. They only want to increase it by 2 trillion. He says, "Where are we going?" He says, I don't want to increase it at all." You
I don't
know.
blame him, and he's not wrong. However, he's not taking into account the fact that GDP has nearly doubled. Output has grown. Tax revenue going forward looks a lot better than it did just a short time ago.
If they can
Plus,
collect all those taxes too, right?
yeah, and the
Yeah.
tariffs. And I was
Yeah.
thinking, I had my Tuesday morning group with me today, and I said, okay, tell me the biggest achievement of the Trump administration. And all three guys at the table said the border, the border, the border. And it's hard to dispute that. That was a big achievement.
Hmm.
But I said, I think his big achievement, his biggest achievement, is getting the Europeans to agree, NATO to agree to a 5% defense budget. And they said, well, that would be huge, but it's just a commitment. And they don't really have the money. And I said, all right, let's say they don't have the money. They already own our bonds. We're worried about this debt. We can sell them all kinds of military equipment to satisfy their 5% defense budgets. And if they don't have the money, they own our bonds. So they've got the liability. So now we've got an asset against the liability. It's a wash. It's a repo. We've been so worried for the last 10 years about the possibility of defaulting on our bonds. We're saying just cash in some of your bonds for some of this equipment. because we're already in debt to them. They already hold our bonds. So
It's an interesting point. Yeah.
they thought about that. You know, in terms of the balance sheet, I mean, our debt gets wiped away because we've gone from a debtor. Every time we sell them weapons, we've gone from a debtor to a creditor. So that offsets the debt. Maybe the balance sheet grows. Maybe you just do a wash and wash the balance sheet. But essentially, if they don't have the money for weapons, they have the bonds for weapons. They own the bonds.
So so the defense budget, defense department, the defense sector grows
Oh, no
in this
doubt.
picture.
Yeah, and it's been growing.
Right.
And the more they have to buy, the more the defense. I mean, we are the largest arms merchant in the world. And
Right.
what Trump did was he basically said to his customers, look, I want you guys to boost your spending, your defense spending. And I'm happy to sell you these weapons, right? And if they don't have the money, he'll say, well, all right, you know, it's equivalent to defaulting on bonds without a default.
That's an interesting thought. Yeah.
So, I mean,
Now, what?
he's built this around this house of cards. He's really worked his way around it. It's brilliant.
Yeah. And Besant's right in the middle of it, standing up. Yeah.
I heard guys today talking about that Bessent should be Fed chairman, and I think he effectively is. You know, he's going to be the Fed's biggest customer
Right.
by doing all this funding in the short markets. That's the other place where he's going to reduce the debt, the
Right.
interest in the debt.
Right. And the rolling everything short.
Yeah.
Um, Over the weekend, there was an election in Argentina, and
Oh yes.
Milei's party was in power. And there was some concerns because there was some polls out or a local election in one of the major cities that he wasn't going to win anyway a couple of months ago, and it really kicked some of the Argentine stocks down, GGAL, YPF, and yesterday up 30%, 35%. And there's a couple of things talking to people who are very knowledgeable on that part of the world. Milei wants to end his central bank. He wants to do away with it. He thinks all they do is steal, rob. Central banks globally. He thinks
And he
central
wants to
banks.
dollarize. He wants to go
Yeah.
to dollars.
So now he's got the backing to do it. So it's going to be an interesting point, an interesting case to see how that plays out over the next 18 months. His midterms are up, and he's won, and he's going to be a strong force to fight against. Now, how do you invest in Argentina? The two stocks that we've been discussing, GGAL and YPF. I spoke to somebody this morning, and they said if the economy does grow, those sectors may not benefit. Like those companies themselves may not benefit. They may
Well,
get the
YPF is
benefit.
financial. So he's
And
thinking that the financial sector is not going to grow, not going to benefit.
well,
Why?
GGAL. He's saying specifically GGAL, which is
Oil,
oil.
energy.
Yeah, he says I don't know if you're going to see that grow in this economy with the economy growing the way it was. And thought it was an interesting take from somebody who's pretty well entrenched in that part of the world.
Well, you know, rising tide lifts all boats, and maybe that sector is not going to perform as well as others. But let's just uncouple what we've said.
Hmm.
First of all, there was the swap lines that he gave them
Yep.
2 weeks ago, 3 weeks ago. That was a huge help to his election.
Yep.
He basically bailed out the peso by doing a dollar peso repo, right? So he defended the peso, and Milei wants to get rid of the Fed or his Fed,
Right.
his central bank, and the peso. He wants to dollarize. I don't think you could look at Argentina and not think about Venezuela. Latin America, it, he he's picked his ally in Latin America.
Yep.
He's got his ally in the Middle East with Israel. I don't know who his ally is in Europe. That's an open question.
Italy, I would think, was very close to the Italians.
It's hard to
Alone.
say. I
Yeah.
guess you'd have to call it NATO. for want of a better. But yeah, but what he's done is he's got a sheriff in different parts of the world. He just went to Japan. He's given them missiles now. So he's got Japan and he locked up Australia.
Hmm.
So he's got sheriffs in different parts of the world. And I would argue strongly that his sheriff in Latin America is Milei.
Yeah.
So Argentina might be a factor if he does something in Venezuela. And then this is a separate topic. I want to get into it, but Venezuela, he's not necessarily going to war in Venezuela if he hits. I think what he's planning to do is hit the labs. And guys like Rand Paul will look at that and say he's going to war without our approval.
Right.
And I think he took great pains to make the cartels defined as terrorist organizations. So there's plenty of history, ISIS among them, for joint for military operations against the terrorist organization, and I think that's going to be his position. So when Congress says, "Well, you didn't," if he hits Venezuela, and Congress says, "Well, you hit Venezuela, you're going to war in Venezuela," he's going to say, "No, I'm not. I'm doing an operation against a defined terrorist organization,
A
the
surgical
cartel."
strike, yeah,
And
against
and the
that.
Nobel Peace Prize winner named Maduro as the guy in charge of the biggest cartel there just yesterday. So he's on
Right.
solid ground. So that may be ahead for us. And where Argentina fits in that, I don't know. Maybe the base is in Argentina. Maybe he builds a base in Argentina. Clearly, the U.S. and Argentina are now strategic allies,
Yeah.
strategic partners. And Milei is his horse in that part of the world. So he's done it. He's got Asia with Japan. He's got the Middle East with Israel. And Europe, I don't know, it's an open question. Um, but in Latin America, I think it's Argentina. I think Argentina is the winner. Maybe Chile, too. And he seems to have Colombia at the end of his nose. I don't know what's going on there. But Colombia is essentially a non-entity. Don't forget, Argentina, they went to war with the Falklands, you know,
Yeah.
right?
I remember
So,
that. Yeah.
so Argentina could be a very strong future ally, and that's excellent for that market.
Yeah.
Plenty of opportunities, long more than those two stocks. They probably have a mini defense industry. You could buy defense stocks in Argentina, come out smiling.
But I don't know if you could buy them New York Stock Exchange related, or if they are tradable in the U.S. You might have to buy them in Argentine pesos.
Got
That's
to do a little homework.
yeah.
Got to do
I
a little
certainly
homework.
do
But
because
from
I
a
think there's
macro
opportunities.
standpoint, Argentina is the best buy in Latin America right now.
Yeah,
And
it's
it's
great
not just us.
opportunities over the
Everything's cheap.
next and
The
great
currency's
opportunities.
cheap. If you believe he's getting out of the currency, that's a currency play as well. So big recommendation, big up arrows on
Yeah, a
Argentina.
lot of opportunities in the next 2 years
Yeah,
for Argentina because he's got the mandate now,
yeah,
and it's going to be a blueprint. We've said it a number of times, a blueprint of what he wants to do economically here. So we'll see how that plays out.
yeah. I mean, he's got buyers of his position in Russia was interesting. He basically his position is really, look, I'd like to come to a deal. Let Putin come to a deal, and Putin won't come to a deal. He's not caving in.
Right.
So he'll say, "All right, I'll sell all the weapons to Europe." And if they say, "Well, we don't have the money," I'll say, "Well, you got the bonds. Don't worry about the bonds. Consider it a synthetic default."
So so it's like the guy who maybe it's a bad analogy. Back in the day, the guy who breaks your window and says you owe me money to keep your window, make sure nobody breaks your window.
It's not dissimilar. Maybe it's not a pure analogy, but it's not dissimilar.
Yeah. I know
It's
you owe me money. I know I owe you money, but that's okay. We're going to make that go away.
Yeah, that's exactly right. Look
Look
at
at
what
him.
I got for you. I got a deal for you here.
That's
And
right.
it's brilliant. It's absolutely brilliant. Everybody's worried about defaulting, and he's going to say, "I'm going to sell weapons to get out of it." And,
Right.
he's going to generate revenue, and if
He's
they don't
selling
make the money,
weapons, and on the other hand, he's trying to end wars.
yeah,
Right? These guys, so he's selling these people weapons, Maybe that's strength in deterrent, right? That's the deterrent is to have more weapons around. I don't know. I
I
was
don't
talking to
know.
my neighbor.
This guy, he's 6 months to a year ahead of everybody else. They can't figure out what he's done until they wait 6 months, you know?
Right, right. But we talk about putting more weapons around. I was talking to my neighbor down south, and he was telling me about a bar in North Carolina many years ago. And you walk in, and they said, "Do you have a knife or a gun?" And no. He said, "All right, go over there and get one because we want to make sure everybody's on equal footing." He says it was absolutely true. He says, just know everybody in this bar has got a knife and a gun. Okay,
So there's an argument for that. There's
that's
signs
right.
all over Texas saying drive friendly, and that's because everybody's packing. Florida,
That's
too.
it. So, so basically, what Trump is trying to do is put weapons all over and say, "Don't play around," because everybody's on the same page.
Well, it's a little different because
Yeah,
he wants to sell to Europe to basically end the war in Ukraine. Because, try to look at it from Putin's standpoint. 4 years ago, what's it? He's in Ukraine 3 years now, right?
oh, more than that, isn't it? Was it 22? Did he go in
It's
February
at
of
least
22?
3 years.
I thought it was
So
earlier than
when he
that.
went in, when he went into Ukraine, what did the world look like? NATO, the Europeans wouldn't even pay 2% of their defense budget,
Right,
right? They were committed. They had committed to 2%, and they were underinvested. And now Trump has got them agreeing to pay 5%, and he's willing to sell them the weapons to do it on credit because we're debtors to them as it
right,
stands now,
right,
right? He was facing Biden, and now he's facing Trump. He's seized a whole block of land, the piece that he wanted, the Donbass and the land bridge. He's got all that sewn up. So a rational guy would look at this, say, all right, the picture is vastly different than it was 3 years ago. It was easy sledding 3 years ago. And look at all the men I lost, and look at where I am now. And I'm tired. But now, going forward, it's going to be a lot tougher sledding. I'm facing I'm facing these 5% defense budgets, and I'm facing an arms merchant, and I'm facing Trump and not Biden. You know, it might a rational guy could say, "Let me declare victory and get the hell out." And that's what Trump is banking on. When he said, just okay, keep the lines where they are. You guys all go home to your families. That was what he said 2 weeks ago. That's
hmm
vastly different than a month ago when he said, the Ukraine could still win this. He's not saying that anymore. He's saying, go home and keep the lines where they are. So if I'm Putin and I'm rational, I'm saying, you know what? This is a win-win. I can get the hell out of this now. I can negotiate my way into a nice settlement. I don't have to be an outlier. I'm with the rest of them. I'm not dependent on China anymore.
Yeah, and 2 weeks ago is when he put the tariffs on the oil, right? On Russian
Yeah,
oil.
he's got secondary sanctions now.
Sanctions. That was it. Yeah.
Yeah, he's got secondary sanctions. And he's got India caving in,
Right.
right? And people are saying, well, I'm not going to cut off all the oil, but I'll sharply reduce my oil purchases. Plus, he's got oil down to $56 a barrel, right? But that doesn't help Putin.
hmm
So, all in all, a rational guy would look at this and say, yeah, I can get out. I won.
And we have oil at $56 a barrel, and we really haven't gotten to the point of drill baby drill has kicked in yet. It still takes a while to get those wells online.
Yeah, but he's still got to replenish the reserve.
Yeah.
He's starting to do that. And I think he's trying to put a floor on it because my guys tell me that $60 is the number
Right.
where it starts to hurt and it doesn't really pay to get new oil out of the ground.
Right.
Maybe that's true, maybe it's not, but he's under that now. So I think that's why he's opting to replenish the reserve, to put a bid on it. And he's
hmm
telling the rest of the world, I'll supply you oil. He's telling India, don't worry about it, I'll supply you. He's telling who else? Who else did he talk out of buying Russian oil? Somebody else. Singapore, Cambodia. That's another thing.
Probably.
He did this deal with Singapore and Cambodia, and he got them to put down their weapons by threatening with tariffs.
Not Singapore, wasn't it? Was it Thailand or
Thailand and
Cambodia?
Cambodia, yeah.
Yeah,
Yeah.
yeah.
So I don't know if he's got his sheriff in that part of the world. To me, I think it's Japan, especially with this new
With the
lady.
new
This new
prime
lady.
minister, yeah.
Yeah, yeah. He buttoned up Australia last week. Did a deal for strategic minerals. I mean, he's been
Yeah, there's
busy.
supposed to be some rare earth deals coming out of this China trip too. So
Yeah,
yeah, a
but
lot
that,
going on.
yeah. Uh,
Um,
in terms of the cards with China, China's got one more card to play, and that's pharmaceuticals. They still have a chokehold on our pharmaceuticals. But Trump has got the major card, I think, for Trump is I'll delist your stocks and you won't have access to Western capital. That would crush them. It could mean war, right? So that's a really big card to play. And he could start making noises about that. He's been getting away with saying, all right, I'll move the tariff up 100%. And that's what got him off the dime with the rare minerals. So,
right. Just moving to another note. Since we last spoke, we've seen gold go up $400 or something like that, and come down just as quickly. What are you
well, all
thinking?
that craziness is revolving around delivery, I think. I mean, we got to have some serious questions as to whether or not the gold people say they have, they really have. Whether or
Right.
not it's been hypothecated two or three times, you know, who knows
But
what's
on the
going on.
way up, my thought all along was that it was central bank buying, because they were fearful of what Trump would do if they got in his crosshairs, right? So is this now he's taking a softer tone to the rest of the world, and central banks are taking a step back, and they're not as aggressively buying?
Well, let me ask you this. Was it central bank buying or central bank delivery, buying and delivery? Because I think that's the problem here. I think the
Right.
problem is there's a scarcity in the paper gold. A lot of people have it, and they're starting to demand physical gold.
Hmm.
And central banks don't want to give that up, I guess. I don't know. I don't know enough about that market, but this, from what I'm hearing, the arbitrages from center to center, from what I'm hearing, this is all wrapped around delivery.
Yeah, having a big problem with that. And I know in the retail FX market, a lot of the retail players were holding the risk. The retail brokers were holding the risk, not offsetting it, and big losses were coming in on both sides. And now they're reneging, defaulting. So something to be aware of.
Yeah,
Yeah.
yeah. I mean, I don't follow gold very closely, but somebody mentioned the word backwardation to me. And when you start talking about that, you're talking about delivery and delivery
Hmm.
issues. And I think that that's a classic kind of short covering, you know?
Yeah, but we're out of the short covering mode now. There was a comment that I read this morning, and I'm going to read it to you
Well,
and
before
get
you
your
get
thoughts.
there, let me
Yeah.
just ask you this. You long paper gold,
Hmm.
right?
And I am.
Okay. And you demand delivery from your counterpart, and they can't deliver. Are you going to sell?
No.
No. But
Well,
they can't
because
deliver. If they can't perform, see, there's a performance risk issue here around gold.
mhm.
And
But at some point they have to go out and buy it to deliver. They have an obligation.
but if they can't get it, if they
Well,
can't
then the
get it,
price goes up.
yeah, fine.
But they can't
And it
get it
goes
at this
up,
price, but they
and
can get it at
and
the
they
next
don't have
price.
the money to pay you if it goes up. They're leveraged.
But the exchange does. And that's why there's an exchange in the middle to guarantee that.
But the exchange super margins the other side. Don't forget the exchange has two sides to the trade. And
Hmm.
granted, if the exchange has to eat one side, they're going to do everything they can to get margin off the other side. which means whatever good positions you got, you're going to get out of to pay the exchange. It's the old watermelon theory, right?
Yeah, yeah,
I'm broke and all I got is watermelons. Watermelon prices are going down because I got to
right.
liquidate them to pay you.
But if they don't have gold, gold isn't what they're liquidating. They're liquidating other commodities, other pieces. I
There's,
think
there's
at some point if that is a delivery problem, then gold is going to go back up.
gold, yes, but everything else, they got to settle the gold contracts. You remember what happened with the hunts?
Hmm.
I mean, as soon as the hunts couldn't meet margin, all the guys that were short put their hands in their pockets and they let the contracts collapse,
Right.
right? And silver went from $44 to, I don't know, $20, something like that. And the hunts still had those positions, but they had to get out. So you could see liquidations of all kinds of things based on the disparities in the gold market. It depends on how nice they are to one another when you say, look, I demand gold. Your contract says I can have gold, I want it. What are you going to do? If you can't deliver, what are you going to do? You got to satisfy me some way else. And that's with money. So I think the exchanges are really sweating out the gold market. I think that's why gold is collapsing. It should
Interesting.
go up, but if you don't have the money, you know, if you can't
Yeah.
deliver, you got to get out.
But but that's the point. If you can't deliver, it's the shorts that can't deliver,
True,
right? So they
true,
have to get out.
right. And they
So
have to
what?
get
So
out
if you're a
and ha-
short and you can't get out, what do you have to do? You have to buy,
or go broke,
right?
or liquidate whatever and default on my contract, right?
Okay.
And go see a judge and right. And you're the long saying, hey, it should go up. Yeah, but your other side just bailed out, and the exchange is left hanging.
That's the key. The exchange is left hanging. The full
Yeah,
faith and credit, right?
yeah.
So what happens? What happens if an ETF like GLD, SLV defaults? What happens to the New York Stock Exchange?
Well, I think if there is a major default in gold, and that could be what people are afraid of. I don't know. I'm not inside that market,
Right.
and we're just way speculating here.
Yeah.
But if that were to happen, then there'd be a massive liquidation of all the high flyers. You'd see Nvidia get hit. You'd see all the high techs get hit because people are going to have to raise money, and they got to get out of good positions to raise money. And that's my argument here. If in fact there's problems in the delivery portions of the gold market, and there appears to be one potential eventuality is liquidation because you have to satisfy the other side. And if you can't satisfy them with the physical, then you got to come up with money immediately. And there are leverage positions here. I
Hmm.
think that's what's happened in gold. People bought paper gold, leveraged two, three times, 50 times, who the hell knows. So I think when there's a big blow up in one market, it bleeds into other markets. And
Hmm.
that's my concern here.
And yeah, bleeds into other markets, and that's why I think stocks may be, as you say, the Nvidias, the high flyers, may be in jeopardy if there is a liquidation event.
It's the
Let me just read.
watermelon scenario. Good, sorry.
So, an old friend just posted this. Japan just flipped the global playbook. For the first time in 20 years, Japan's own debt pays more than America's equity dividends. That's not a typo. It's a tremor beneath global capital markets. The old carry trade logic, borrow yen, buy U.S. assets, suddenly looks past its sell by date. The tide of Japanese money that's funded global risk taking for decades might be turning. What do you think of that?
Well, the last time the carry trade started unwinding, we collapsed.
Yeah,
That's a big source of leverage
yeah.
to the fund managers. So this guy is saying that the carry trade is collapsing.
He's saying that Japan's own debt pays more than America's equity dividends. First time in 20 years.
Okay. Well, what does that mean, though?
Well, that means you don't have to. The Japanese can keep their money at home and get the yield that they were looking for. They don't have to buy U.S. assets to do that.
Does this mean Japanese rates are going up?
Yeah,
Okay. Then, if that's the case, that hurts the carry trade.
right. I thought it was interesting.
Well,
Yeah,
that is interesting.
it's something to look at. Yeah, that's some more homework we have to do
Yeah,
on that
but
one.
let me make one more point. We used to talk about the Fed put, the Fed put. If market collapses, the Fed would step in. Now you got the Trump put.
Hmm.
The market collapses, the Trump releases good information, the trade deal, something, and that's the new. Trump is the new Fed put.
Yeah,
So
right. He doesn't let things collapse. Yeah,
yeah, so if we get a good, I think I've gone from a buy the dip to a buy the crash,
yeah,
right?
yeah. I've been looking for a sell-off, thinking that things have been frothy for a long time, and it hasn't paid off. But I can't throw the towel in. I have to have protection for the downside because things it really is very frothy out there.
I'll tell you, I got hurt today because there was good AI news, and they sold the quantum stocks.
Hmm.
So I'm going to live with it. I explained to somebody. Somebody said, "How are you playing this?" I said, "All my long stock positions, equity positions, are owning the stock in long term. All my bearish positions are short term puts.
Hmm.
So I in another month or 2 months, I'm not going to have very much protection. So and maybe I'll roll it if it doesn't happen. I don't know, but basically my downside is short term, and my long term positions are all bullish.
I think that's fair, and I think I'm pretty much set up the same way. When I say puts, some of the I do have some longer date puts that go out to January of 2027 on some of the private credit, private equity side. But most of my stuff and my idea of short term and yours is different. I'm out to March. I look at that as short term puts.
Yeah,
Um,
and the other thing, you just made a point about private equity, and that's not participating in this rally. BX,
yeah,
Cargyle,
yeah,
uh, KKR, they're not behaving well at all.
right.
Yeah.
All right. Well, I
Okay.
think we touched on a few things. We had a good catch up call. So
Yep.
um, I guess we'll leave it here and see where we go.
All right. Have a good night.
All right, Tim. Yep. Thanks.